lot of discussion this morning about just how serious this is, whether this is a story to fill a summer Friday or whether there's actual serious contagion concerns.
So, I mean, obviously a huge story for the Turkish people because they're going to face horrific inflation as they have been. And the president just now, he smells weakness, so he's going to attack them even more when he's got the opportunity for it. Whether or not there is more contagion here, hard to say. We have been seeing this evolution in Turkey, more autocracy on the part of Erdogan, his unwillingness to let the central bank do what it needs to do at a moment like this. I mean, very, very simply, interest rates in the United States are higher than they were a year ago. And when you can get 3% on a 10-year in the United States as an investor, you now demand more from other unstable places in the world. And so you will take your money out of a place like Turkey. If you want to keep that money in the country, and he needs to because he has a current account deficit, you got to let interest rates rise. But he doesn't want to do that. So you've had a run on the currency. It's been dramatic. The statement he made this morning, which really sent the markets to a low, was when he said, can we bring up this full screen? They have dollars. They have their dollars. Don't forget this. If they have got their dollars, we have got our people, our right, our Allah. He didn't seem to suggest that he was really willing to actually do all the things that need to be done right now. Now, his son-in-law, I understand, has just taken the stage. Do we have that video? And is making a speech where he's going to say some of the correct things, like, we need a stronger monetary policy. That would be
independent central bank.
Exactly. Right. These would all be good things. I don't know, though, if this is enough to turn around this currency, especially in the wake of President Trump's tweet. They need a policy shock of huge proportions. Will they let the central bank do what they need to do?
And then the question is, what's the kind of transmission mechanism, if any, out of Turkey to the rest of the global markets? We don't really know exactly how active that is right now. The emerging markets currency index is down. The U.S. dollar index, the overall U.S. dollar index, is up at a 13-month high. So that is the way you would see it impact our markets if it was basically a global financial tightening that came through the dollar.
Well, people are pointing out, 1% of all global outstanding loan exposure, right?
Yes.
The stock market's 150 billion size of Netflix.
Yes, sure.
This is not a new story. Currency's been falling for a decade. They're already junk. All right. I mean, how much of this is a surprise?
Right, right. I think that's absolutely all those good points. That's why I don't think you have as big a reaction in the United States. But to Mike's point, transmission mechanism. What does that mean? When you see this happening in Turkey, what happens physically with the distribution of money and loans, etc.? There are some banks in Europe that have heavy exposure there. What have they done in order to protect themselves against what they knew was happening in Turkey? Could there be a failure? Their stock prices don't act like a failure. They act like a hit to earnings.
Absolutely. And so if you look back to 1997, 1998, when you've had these emerging markets-driven global financial crises, it was because there was a tremendous amount of capital stacked up in grabbing for yield in parts of the world and not having the liquidity once things turned. And that created a clog in the system. So it's not clear that's going to happen. Look, 5.5 years ago, we got a crisis in Cyprus that briefly concerned our markets.
I was there for 2 weeks. Don't remind me.
Exactly. But we were in a very different spot.
Don't you tell me about Cyprus.
Right? We still had global financial crisis, PTSD, very active at that point.
Yes, yes. But also what was crucial about Cyprus was they were going to redesign the whole process for how a European bank would be allowed to fail. Right? That was the drama there. It was much wider than Cyprus. We have to ask now, are we at the point where they may have to test that process that they put in place with Cyprus for any banks? I don't see it right now.
The difference here is that we've got higher U.S. rates. We're starting to get QT, quantitative tightening, at the ECB, at the BOJ, as Peter Bukvar points out today. When things like that are happening, that's when accidents are prone to happen.